Good morning, everybody, and welcome to this week's Motor Trade Radio podcast in association with eBay Motor Group. It is Saturday, 11th of January, and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. So we can confidently say we've got a good show this week, haven't we, Phil? Because we've got the roundup of the new car sales figures for 2019, and we've also got a bit of a special on used car trends for last year and possible trends for this year.
Yeah, we have. And unfortunately, we are going to be talking about a reasonably sized business up in Scotland that unfortunately has gone into administration this recent week. But that's on the back of some of the performance that's been, there's a news story on the performance up in Scotland as well, isn't there? So unfortunately, the year has started off with a couple of negatives there. But I think generally, there's certainly been some winners and losers in December on the new car market, aren't there? I think with the figures that we've had sight of, Curtis.
So these figures came out on I think it was Monday. So the headline figure is really year to date was down 2.4%. December was actually up 3.4%, which we can talk about. And curiously, because the SMMT break out the top 10 sellers for the month, and this has happened once before this year, where one of the, because it's broken down according to cars, but this other reappeared in December. Now, other is effectively Tesla, because Tesla, I don't think they sign up to the SMMT, so the SMMT have got to account for Tesla sales. But Tesla were the ninth biggest selling car in December, selling 2,685 units. We don't actually know which car it was, though, because it just says other.
Yeah, but, you don't normally see that, do you, at all? I mean, you do, like you say, you have the other brands, don't you, that take a proportion, yes, which are some of the import franchises, and as you say, that don't necessarily sign up to all the SMMT reporting figures. But it's the first time it's been highlighted to me that other has actually appeared in the top 10 best sellers. I've never really seen it before.
It's happened once before, midway through last year, because it prompted me to call the SMMT, because I said, well, who's other then? And they couldn't actually say, but it was kind of inferred that it must be who I just suggested it was, Tesla.
Who did that many registrations in the month of December? Okay. So, yeah, I think, as you say, Curtis, I mean, the figures are very interesting, as you say, with the 3.4% increase up to 100 and just short of 149,000 registrations against 144,000 in December last year, and that took the year to date to just over 2.3 million for the full year 2019, which is a slight fall on 2018 of 2.367 million, a 2.4% decline. And I'm personally very happy with that figure, because we forecast in the June Cox Automotive Insight report that we'd finished the year of just short of that figure. So we're within 0.57% of the final figure. So I think I'm quite comfortable with our forecasting figure. But again, I think, considering the headwinds and some of the challenges throughout the year that we've been talking about on a regular basis through the podcast, I think it's not a bad figure, that, really.
Yeah, absolutely right. I mean, for the year, it's only about 55,000 units adrift of the previous year. So, all things considered, it could have been a lot worse, bearing in mind the various headwinds that we saw throughout last year, be they political, economic. I mean, consumer confidence did take a bit of a battering last year.
Yeah, I mean, albeit though, I mean, we are talking registrations here, not necessarily
Yep.
sales, which is the interesting one, because back in October, when we were reporting on the September figures, we'd had obviously insight that there was rumours that the 94,000 registrations took place in the closing 3 days of the month of September, which is 28% of the total for the month. And you've been looking at the year-on-year performance by some of the manufacturers that contributed to the 3.4% increase in December, and there's probably some indications there that I think there's been some last minute tactical registration activity, I might suggest, ahead of the
Yes, yeah, I
cafe.
think you're right there. A lot of activity in December. There's over 12 brands that saw double-digit percentage growth, and I'll run through them quickly because some of these figures we would never ever see in December. So Audi, they were up 38%. BMW up 22%, Citroen up 44%, Dacia, they were up 25%, DS, 265%. Just to give that a bit of context, that's from 185 vehicles in 2018 to 676 in 2019. So from a very low base. Kia, they were up 31%. Lexus up 77%. There's more. Peugeot, they're up 20%. Porsche up 43%. Renault up 32%. Seat up 31%. And Toyota up 61%. So yeah, look, a lot of activity there, and we've touched on this over recent weeks about the new emissions rules and regs that kicked in on the 1st of January. So it was in the interest of a lot of manufacturers to get a lot of their cars registered last year, so they don't fall into 2020 registrations, because the idea is to get the CO2 levels down.
Yeah, you're right. I mean, there's probably an element of that, an element of product arriving and things like this, and I think there'll be a rush for that full year market share figure that would have taken place, particularly from your BMWs, your Audis, your Mercedes of the world. I mean, BMW for the full year has finished at 7.27 in terms of percentage market share, but they've actually dropped 1.3% on the year. They were slightly behind Mercedes at 7.28% of market share, who was slightly down, so 0.24%. So I think Mercedes have had a fairly strong year. Their activity in December had actually fallen by 15% year on year, but like I say, they've sort of leveled out in the full year. And people like Audi fell back to 6.07% in terms of market share and dropped 3.35% as a movement for the full year. So again, there is always a bit of a battle between those German brands as we get into the year end, but you probably see some cleansing of some of the products, getting ahead of the cafe that we've talked about numerous times on the podcast, where they will start to see fines, and there'll be some engine models that they'll want to get registered this year to get them off the books and out of the way. But I think positively we might see some activity in the first quarter of this year as those vehicles go out as used cars. So we may see the strength in the used car transactions, because they'll go from pre-reg tactical registrations, they'll go onto the retailer's books as a used car stock code in most cases, and then get retailed as a pre-reg vehicle but displayed as a used car transaction via the DVLA. So again, you get that double impact. You get the new car figures this month, and then used car figures when the car does actually get sold to a consumer at some point in time.
Yeah, and a couple more points on the full year sales. I mean, it's I think this marks the lowest level for 6 years. Also, interesting observation from the SMMT is that CO2 levels actually increased for the third year. They were up 2.7% to 127 grams per kilometre, so the average across all new cars registered. So that is disappointing, and that is a reflection, of course, of the fall of diesel, which was down over 20% for the year.
Yeah, and it's a challenging fourth quarter as well. I mean, the fourth quarter was down to 442,000 from 448,000 the year before and 456. So, back in 2016, the fourth quarter was actually 100,000 units more at 542,000. So we have seen that fall off in the fourth quarter as well, unfortunately. But I think we forecast it, didn't we? And we knew what was probably going to be facing us, but I don't think anybody predicted that we'd see an increase of that level in the month of December. Possibly, I think there was reports that we might see a year-on-year fairly level final month of the year, but no, we saw a little bit of activity take place.
And it's worth talking about vans as well, because they did, once again they didn't get any coverage that I could see in the sort of in the usual outlets. So December was up 7.8%, and year end was actually up 2.4%. So that was the third best year on record, with 365,000 units registered. So a good strong end to the year there. And December being up, that followed 3 months of decline. So the market did rally there in the end.
Oh, exactly. And moving on to the next story, which is in motortrader.com, and this is that dealers in Scotland worst hit for new car sales in 2019, and this is quite an interesting one, isn't it? In terms of and it's something that I look at a bit as well. Is looking at that Scottish market, because it does operate differently to the rest of the UK, and it's something that it's worth talking about when we do have sight of these figures.
Yeah, and in descending order, so Scotland, Scottish market was down 5.4%, England was down 2.1%, Northern Ireland's down 1.9%, and Wales down 0.9%. So it just shows the sort of relative weakness there of the Scottish market last year.
I think to put that in context a little bit, and it's not taking away anything from necessarily Northern Ireland or Wales, but you have got some strong franchise groups in that Scottish market, haven't you, in terms of that franchise market as well. So but they have had obviously from the figures there, they have had a bit of a challenging time, haven't they, unfortunately.
Yeah, which brings us on to our next headline, which is from Car Dealer magazine. Leven Car Company goes into administration. So this is Leven Car Company, based in Selkirk and Edinburgh, which represents Kia, Mitsubishi, Suzuki, Aston Martin, Lotus, Rolls-Royce and Caterham across, I think it's about 4 sites in those 2 areas. So this is disappointing news, and administrators have been called in and they are looking for a buyer, but that will affect 139 staff.
Yeah, it's a shame as well. I mean, and particularly we had Mark Lavery on recently from Cambria Automobile Group, and obviously around their sort of luxury sector that they've moved into, and he pointed out people like Rolls-Royce and Aston Martin, didn't he, in terms of their adding to their contribution to the growth and profitability. But again, it's a shame, because these guys only just made an acquisition in March of 2018, didn't they, where they took Kia, Mitsubishi, Suzuki and Lotus franchises from the Belmont Group back in March, unfortunately. So yeah, it is a real shame, and it's a shame that we started off 2020 in that way.
Yeah, but there's some good brands there, so hopefully some of those businesses will be sought after by other groups.
No, exactly. I think there's good enough, as we said just before. There's some good operators across the Scottish market, and there are obviously some strong dealer groups that could represent each of those brands very well, and hopefully the staff themselves will actually find jobs as well. So like I say, hopefully they'll get picked up fairly quickly and get taken over.
So the next story is from Auto Retail Network, and it's new Chinese brand seeks retailers. So this is a story about a brand called DFSK, which some listeners may recall because it's not actually the first time that it's been on sale in the UK. I certainly remember back in 2012 when it was reintroduced by Jim Tyrrell, who was the ex-boss of Mitsubishi, and they were based in Swindon, and they had something like 30 odd dealers, and the idea was that they were filling the gap left by if you remember those sort of micro vans, the Suzuki Carry and Daihatsu Hi-Jet, and they did have a small lineup of vans to fill that particular gap. Then, more recently, 2017, I was wandering around the commercial vehicle show in Birmingham and went onto the SsangYong stand, and there were 3 or 4 DFSK models there because SsangYong's distributor, Bassadoni Group, were reintroducing the brand into the UK. So they're, again, similar sized vehicles. I'm not sure what happened. I'm not sure if they managed to sign up any dealers. It certainly went very quiet. So the news here from Auto Retail Network is that they're back. They're looking for dealers. They're being imported by Soken Automotive, who are based down in Dorset, and their USP this time around is going to be a SUV, which is a Volvo XC60 size SUV, but it's a 7-seater, and for £24,000 it will be the cheapest 7-seat SUV on the market.
Yeah, and they do make a point of talking about the electric vans as well, haven't they? That they've got a focus on as well. I'm just on their website at the minute, and it actually doesn't look a bad thing, does it? It looks quite a nice looking vehicle, and the vans look like they do a job as well.
Yeah, the SUV looks, that's a lot of metal for the money.
Yeah, definitely. It's interesting because, like you say, they're talking about the vans being available early 2020, so they're obviously fairly quick off the mark in terms of they've got a drop side van that they've got coming in and a tipper that they've got coming in as well. So again, it will be interesting, this one, and I think we've seen. If you look at the new car figures you were talking about earlier, Curtis, in terms of some of those winners and losers in the December performance, and one thing that did stand out was MG. And MG had actually increased 161% year on year. So they'd gone from 650 units to 1,700 units in the month of December. And MG is starting to get picked up as a sort of a secondary franchise from a lot of the groups. And you can kind of see that where that sits with these guys, can't you? That it would sit nicely with those ones that have taken on people like Subaru and SsangYong and MG as that sort of secondary or addition to their used car operation, where they do want a franchise.
Yeah, and this was the hope of SsangYong, that some of their dealers would sign up for the franchise. And interesting you mentioned MG, because I didn't realise, but the GS, which is their small SUV, has been discontinued after less than 3 years. That really surprised me, because that was going to be the volume model. But as you say, they ended up doing rather well last year.
They've done, yeah. I mean, again, how much a natural retail sales and how much might be tactical registrations, but I know that they've obviously launched the electric vehicle, which a lot of the retailers have obviously put on as demos and things like that across the network. So again, it seems to be a place for some of these smaller bolt-on, smaller volume franchises for a lot of the dealer groups that are just looking for something a little bit different. Maybe the profit margins, albeit volume, might be lower. That maybe the profit per unit is useful. They're not getting the pressures from some of the bigger franchises that they may be getting. So it'll be interesting how these guys get on, and like you say, hopefully, as you say, third time lucky.
Yes.
But it's not one of these brands that come in. I'm not, whether they're going to be in the top 10 as others quite soon on the SMMT top 10 performers or not remains to be seen, won't it? So so some brief headlines there. So very interesting, lots going on still, and lots of activity early on in the year so far, isn't there?
Oh, yes, plenty going on. So you're listening to the Motor Trade Radio podcast in association with eBay Motors Group, the only weekly podcast serving the car retailing sector. And it's available online at motortraderadio.com even, and by subscribing on iTunes, Spotify, Google Play, Deezer, SoundCloud, and YouTube.
Excellent. So we're now going to go over to an interview that we've recorded with Andy Conde, who is the General Manager of Auctioneers for Cox Automotive and Mannheim. And we'll head over to that now, where Curtis is talking to Andy and myself about the 2019 market and a few thoughts on 2020.
Today, we're delighted to be joined by our special guest, Andy Conde, General Manager of Auctioneers at Cox Automotive. Andy's going to be talking us through some of the used car trends that stood out in 2019 and share his thoughts on some of the challenges and opportunities facing the sector in 2020. So good morning and welcome back to the show, Andy.
Good morning, both. Lovely to be here. Thank you.
Yeah, Happy New Year and everything, Andy.
Yes, definitely. We're halfway through the month now.
It is now, isn't it? Yeah, we have to start. I think there's a debate of when you actually stop saying it, isn't there? I mean, they talk about this between Christmas and New Year, what you should say at that point, and then obviously how long then you tell everyone a Happy New Year. So yeah.
Yeah,
I was getting Happy New Year last week on emails, and this year I'm getting just HNY, so I assume that's the end of it.
Yeah, and this is the last mention on the podcast.
It is.
Good.
Yeah. Officially.
And Andy, many thanks for joining us today. And as I said, you're going to be shedding some light on 2019 trends and any thoughts on 2020. So as we know, RVs experienced a bit of a roller coaster ride at the beginning of last year before stabilizing around the midpoint and finishing in December with what CAP HBI said were probably their strongest levels since 2012. Now, how did these trends actually impact the trade sector, and what's your view on how values will perform in January and beyond?
Well, obviously, we started off in January with the normal, I was going to say January madness, but you know what, in 2019, we didn't really see that massive spike in prices that we've seen in previous years. And there was a little bit of evidence in that in 2018. I think people have become more educated now, whereas in the past, come December, probably 1st or 2nd week in December, checkbooks would be closed. Nobody would be buying in October and November, or very few people. And therefore, they were forced to come out in January, historically, and give silly money and not really make a lot of money on those cars, but having to buy them to fill up the forecourt spaces. Now, I think last year we saw a relatively busy November and certainly a busy December. And we saw, this is 2018 into 19, and we didn't see the big spike in 19. Now, this year, it's been governed by lack of units. I can't remember an autumn period whereby there was so few used cars in the marketplace, particularly in the auctions that came up for sale. and like everything, supply and demand is it plays such a major part in our industry, and all through the end of October through November, prices remained very, very strong. Conversion rates remained very, very strong, and subsequently we started off the year with a bang, and prices have just continued on that upward spiral. But again, really dominated by the lack of units on offer, and I think that's probably going to be the trend. It's always difficult the first week or the first 10 days of the month, because quite often you'll get a backlog of cars that haven't been picked up or haven't been processed, ready to come for sale. So it's usually this week. I think there'll be a few units around this week and probably into next week. But I would have thought week commencing the 20th. I think it'll start to just even out then, and I can't really see that there's going to be, lots and lots of vehicles on offer. So I think that will dictate the prices.
Yeah, and in terms of that lack of units during the autumn period, what would you attribute that to?
Well, I think first of all, lack of supply on new cars. And I think there's been a lot more people buying late year, low mileage, used vehicles rather than new cars. Number of reasons. One is I think they've seen a much better value, and I think they haven't had to wait. They've been able to go into a showroom and they've been able to say, right, I want that car. When can I have it? And basically you can have it tomorrow. So there hasn't been a waiting list. And I think people have got a little bit of money to spend. They want to spend it. They don't want to wait to have to spend it. And therefore, I also think that a lot of the big retailers now are not as fussy on selling older vehicles off the forecourts, and they're quite happy to sell 5, 6, 7, 8-year-old cars with a little bit more miles, providing they're clean, tidy, prepared to retail those rather than they would before. So rather than send vehicles into the auction blocks, I think more and more people are retailing older cars, and I think that's really been, and again, there's other avenues of people disposing of cars now, rather than going to a dealer and saying, I want to buy that car, but I've got a part exchange. I think there's more and more people now selling the part exchange first and then going to try and do the deal afterwards. So I think there's a number of reasons why.
Yeah, and any thoughts from you on that, Phil?
Yeah, I think it reiterates what Andy's been saying there. I mean, through the wholesale. I mean, if you look at the fourth quarter of last year, the average first time conversion rates were up 3 percentage points. So you're just looking at last year through September through to December, you were at just over 84% in terms of first time conversion. This year, I say this year, 2018 and 2019. So for 2019, that figure was just short of 87%. So you can see where that volume is, not keeping up necessarily. Oversupply. There is an appetite for product through that fourth quarter, which, like Andy's saying, the retailers are looking for every opportunity to make some profit. Margins have been under pressure throughout 2019. That's going to probably continue into 2020, and we can talk about that another day. But I think there's the retailers are, if there's a car that has got a retail opportunity but doesn't necessarily fit with a stock profiling that they may have had 2 years ago, 3 years ago, because there isn't the volume and the profitability coming through the new car market because of constraints that we've been talking about in terms of the new car figures this year and last year. I think that is part of what's been happening there as well. So I think you're right, and I think that quarter four has been a fairly good month following the realignment of the values that we saw sort of mid-year from CAP HPI. We know at the time it created a lot of conversations at that midpoint, but actually what it did do is create a positive marketplace for conversions and that wholesale prices.
Yeah. Now, Andy, moving on to diesel, I'm kind of interested in how diesel performed last year. We now know that in terms of new car registrations, diesel was down 22% for the year. But how did values and trade demand actually perform in the used sector over the course of last year?
There wasn't really any notable difference in previous years, to be honest. There wasn't the case of somebody coming along and saying, well, I'm not going to buy a diesel because, or I want to buy a diesel because I think they're going to hold their value. My view is this: I think particularly a lot of the supermarkets have come to the conclusion that if there's profit in a vehicle, it doesn't matter whether it's a petrol or diesel or whether it's any other fuel. I think that they haven't really affected the prices. We've seen a strong demand on diesels, very, very few about though. If you look at an auction now, and you'll probably see 25% would be diesel product, and anything that is really clean again will be at a premium, and again because of the demand. So I don't think it's really had a major impact in prices on the used auction prices of diesel cars.
And when you say you're looking at sort of 25% would be diesel, what sort of percentage would that have been maybe a couple of years ago?
You'd probably got 40%.
Yeah.
And I think we saw that coming, didn't we? I think at the start of all the diesel gate and that early drop off of that diesel share in the new, but it's still happening, as you said, Curtis. It's still happening today. But actually, the length of time that has been happening, we are seeing that now has hit the used car market. A few years ago, it wasn't really having any impact. Because your wholesale market was what had been happening the previous year, so you didn't really have the effect from it. But now, it's now been it hasn't been the dominant market share fuel type for some time now. And it's dropping, and that is now starting to show in the used car market. And it was kind of something that we discussed, I think it was last year or the year before, Curtis, on the podcast, wasn't it? That it was kind of, there is demand, and as Andy has said there, there is demand by dealers, the retailers, and there is demand by consumers. The challenge is actually those cars are becoming fewer and fewer in the wholesale market and as a used car, so they are keeping the prices fairly stable. And obviously because the retailers have now got to start thinking about their stock profile and start to think that actually, I cannot have 60% of my used cars being diesel anymore, because whether I've got demand for them or not, it's going to be tougher and tougher to get those cars as a used car in the wholesale market.
So I agree, Phil. And you'd see this going on through the course of 2020. Diesels will remain in demand, and the values will hold, even though the volumes are down.
I think so. Yeah, I think we are now at that point. I think whatever in terms of you're looking at percentages now, but obviously we are looking at percentages on a lower volume. So every time we do a year-on-year percentage or month-on-month percentage in the new car market, it's consistently from a lower point, a lower volume point. But it is, we know that the focus from the manufacturers is on alternative fuel. We know the investment and the focus on EVs. We've seen that start to grow month on month, year on year. We've seen what's happening in the new car market around petrol. So I think we are at this point that we're probably, I don't know, the view may be that in the next sort of 12 months, I think we might see a stabilisation of that market share for diesel, but it's still definitely going to be lower than it's ever been previously. So, the volume's not going to be coming through, but there is still demand, as I say, in the used car market for it, because people still like a diesel vehicle. They still want that torque of a diesel vehicle. They've grown up with diesel vehicles and they still want it, and retailers know that.
Yeah. Now, Phil, you touched on EVs. Now, and as we know, the EV sector was the fastest selling in terms of new cars last year. But I'm wondering, Andy, what you're seeing in the wholesale sector. Are you starting to see a noticeable increase in the volume of EVs coming through?
In all honesty, not a great deal, to be honest. And the demand is very, very, I would use the word sporadic. Yeah. There's certain dealers that will come and buy them. Hasn't really taken off, but I think there's a number of issues. I think we probably all agree there's so much infrastructure still got to be done about EVs in the UK in general, that until that infrastructure is put in, improved battery life, I think improved charging points, and until that's done, I think EVs are still going to be very much on the periphery of the used car market.
Interesting. Is that something you agree with, Phil?
Yeah, and I mean we've entered this term now with the the CAFE standards that have entered now from 2020. There is this focus whether it's a demand or not. I mean through Christmas and New Year, there's been a lot of headlines, particularly in some of the big national medias, around what's going to be happening around the EV sector. There was the things around the motorway services are not ready for it. They haven't got the infrastructure. They haven't got the investment there. We talked, I think it was last week, around one of the large groups, the amount of money that they'd invested in EV. I think it was 2.5 million.
Yeah, that was Jardine. Yes. Yeah.
They have to invest. I know of dealer groups that are putting EV charging points on their side, but they're not thinking about it. They're doing it because they've been asked to do it or been told that they must do it. It's not because the demand is there necessarily. But you've got the new MG, so to take the MG franchise on, you've got the new MG that's an EV, and you have to have a charging point on site, and they'll have that. But actually, nationally, I think there is still a bit of a resilience from people switching into an EV at the minute. But it's coming. We know it's coming, whether it is through consumer demand or not. That EV is coming, whether it is a full plug-in EV or a mild hybrid or something. We know that the petrol and diesel are not necessarily the future for the UK market.
Yeah. Now, Andy, final question. What do you see as the biggest challenges facing dealers in the used sector this year? And also, what are the biggest opportunities for them?
Well, I think the biggest challenges will be, the competition driving prices down. I think profits, dealers will have to look at other avenues of trying to make profit. I think the profit in used cars will be minimal because of the short supply and the prices that are going to have to be paid. I don't think there's going to be masses and masses of profit around, but I do see that if I was a smaller dealer, I would be particularly concerned at the growth of the car supermarkets. And I think that I'm not saying that we're reaching the end of the small dealer. I would hate to think that was going to be the case, but I think that the smaller dealers will find it tougher to compete, tougher to stock, and it will be their loyal buyer base that will keep those people going, rather than people who are just walking in off the street, because we're all more au fait now with shopping around, looking for deals. So whether we're buying a car, whether we're buying a TV or whatever, I think everybody's far more savvy in what we're trying to do, and we're all trying to have a look for the best deal possible. So I think there'll be some winners. I think there'll be quite a lot of losers around already. I think we've started to see a lot more finance repossession at the end of the year and the start of this year. We've seen vehicles coming in and people really struggling, and I really do think the first part of the year it's going to be a step into the unknown. We're not really sure what's going to happen with Europe, and I think the supply of new vehicles will be affected. And I think it's a year, in my view, that I think all of us are going to have to really stick together and help one another as much as we can, because I think without that, I think there's going to be a lot of people going to fall by the wayside.
Yeah, and any thoughts from you there, Phil?
Yeah, no, I'd concur with Andy. I think that the margin pressures has been there for some time now. We know that the retail competitiveness is increasing, consumer expectations are increasing, We've had Mark Lavery on recently. We've had Dash Gupta on from two of the AM 100 groups. They're obviously looking at opportunities. They see opportunities with some of the pressures that some of the smaller dealers are facing. So they see that there's opportunities for them. They're looking at obviously resource. I mean, we talked about it last week in terms of the comment from Dash Gupta to the Skoda site that they acquired, that they bought that Skoda site that was operating with a single site, and they asked the question, how many Skodas have you got? And he said, 60. I said, you're wrong, you've got 600 now.
Yeah,
because you're part of a larger group, and that's the scale. That's where you can overcome. But I think the good operators, be it large or small, they understand the market. They've got controls. They are operating in different sectors of the social media and the e-commerce world to look after customers and attract customers. We can see that coming. Interestingly, when we've asked questions around profitability in 2020, 54% of dealers that were questioned feel that there could be further compression and they could become tougher. That is probably things like the FCA regulations and controls with the DIC controls that are coming in that they're looking at the minute. 30%, just sort of 30% said that they expect them to remain about the same, which are fairly tough as we know. So I think putting a positive note on it, though, I think if we look at, and Andy mentions obviously the Brexit result and things like this, but one thing that has been clear, we've gone into, if you look at the consumer index score for December, that straight away moved 3 points from -14 to -11 in December. So, that's a really positive move for generally from a consumer perspective, and that's purely on the back of the election outcome. And if you look at the biggest movement there, it was from general economic situation that had moved up 7 points. So what we have got to see is a bit like what Mike Allen talked about recently on the podcast when we got the results of the election. It's sustaining that consumer confidence. It's getting business confidence back into the market. There's a lot going on in the new car market. There's a lot of pressures in the used car market, pressures on profitability and everything else. But I think there's one thing really. I think if we do finish the first quarter of this year on some of the figures that we've been forecasting for new and news for the first quarter of 2020, I think it's still testament to the dealers, because it's been a challenging couple of years, I think, generally in the automotive sector. And if we do finish on the 7.9 million used car transactions for 2019, we still finished on a strong figure for the new cars, all considering the headwinds that we faced. I think it's a fairly strong market.
Yeah, no, absolutely right. And yes, confidence is the key, and it was lacking through a lot of last year, but hopefully we're starting to see that return now. So time will tell. So Andy, many thanks for coming on and sharing your views on what shapes last year, and what the likely challenges and opportunities, headwinds will be facing dealers in 2020. But before you go, we'd like you to stick around and talk about this week's And Finally.
It's one that'll suit you perfectly, this one, Andy.
Yes, suits you,
Thanks.
sir. So it comes from Motor Trader, and the headline is "Car Shop Axes Business Suit and Tie in Uniform Launch." So the story is that the Car Shop Group from this month is telling staff they don't need to wear business suits. They've actually come up with a uniform for them, and from the photograph, it varies from very cash. There's a fellow wearing, I guess three-quarter length shorts.
Yeah.
There's another chap wearing a waistcoat and what look like green Wellingtons, and another wearing a gilet. So, what's your view on this? Should sales staff be suited and booted, or not?
Oh, well, my view is I don't necessarily think they need to be suited and booted. I think it's nice to be smart, but I think it's I don't think we have to be regimented with numbers on our backs. I think the relaxed atmosphere. I think people want to come and buy a car. They want to come and buy a car in a relaxed environment. I think if people want to look smart, yes, smart. I don't necessarily, not sure about shorts but in the nice weather. But you go, we're all turning, into our friends across the pond, really, aren't we? It's a sort of dress that I'm actually driving along now, just looking at McDonald's and what we're going to be pulling up soon. We're going to be ordering a Big Mac, a milkshake, and I'll have a Ford Fiesta, please.
and in fairness, the fellow in the photograph wearing the shorts, that may well be the summer uniform. We don't know.
Oh, he's an ex-postman that just can't get away from what he's normally been wearing.
Yes.
Well, as you know, boys, I'm from Wales, and definitely wellies will certainly come in handy in a Welsh. Probably some nice shorts in. I'm just thinking around our auctions, actually. Maybe in Plymouth that we have some shorts, and in Gloucester we have a bit of tweed, and in Scotland we have a bit of tartan. Don't say anything wrong in it. I think it'd be really good. I'm not quite sure what Phil and I'll wear, but
no, depending where we go.
I think I might get myself some +4s. I think I'll be looking quite good on the roster with a pair of +4s.
Well,
and a deer stalker.
Oh, that'd be great. We actually like to dress down on the podcast as well. So there's been various podcasts where I've been wearing my running gear.
Don't get
I think Phil's been in his pajamas.
Yeah, don't get asked Andy. Yeah, I was waiting for Andy to say something on that one, but we won't go there.
I was going to say that, and pajamas and slippers and his pipe, but there you go.
Yes.
Yeah, my silk dressing going on, and me, okay. Yeah. Well, I think you're right, Andy. I think we've seen it sort of migrate. I mean, my early days, I must have 200 ties in my wardrobe upstairs from when I was at dealerships, and then where you could sort of then suddenly migrate into wearing your own kind of suit and tie rather than company uniform ones, which were never the best, were they? I mean, in the early days, they weren't the most best quality of uniforms if you bought a company uniform, as we know. But I think we have migrated into this first no tie and things like this, and a little bit more casual. I think what is clear is that we are still seeing sort of branding. So there is sort of, we look into a dealership today that have gone a little bit more casual, where they might be wearing sports T-shirts and tops and things like this. They've still got a corporate look and feel to them with branding on and things like that, albeit a little bit more casual without a tie and a suit and things like this. But again, I'm not sure we're quite at the tweed waistcoat and green welly stage and knee length shorts, but and baseball cap. I think I'm not sure if that would be going to an extreme, because I think the risk with this is you might separate some of your customers, unfortunately, whether we like to say it or not. I think it's that's why it's always a risk moving one way or the other, because at the end of the day, dealerships have a very broad, diverse customer base, don't they? And as we know, some people won't like it.
Yeah, definitely. I agree.
So I think that's all to say this week. So it's been an absolute pleasure as always, Andy, shedding some light on 2019 and some views on what to expect this year in 2020. It would be great to have you back on again at the end of the quarter, where we can try and have a look back at what happened in this first quarter. And I think the speed in which January is moving at the minute, I think we'll be soon there looking back at the first quarter. But it's been an absolute pleasure as always having you on.
No, and as always, it's always great to speak to you too, and obviously to the listeners. If anybody would like a day at the auction, or they want a bit of insights about the auctions, you know where I am, and it's always great to hear from everybody.
Fantastic. Well, this week you've been listening to the Motor Trade Radio in association with eBay Motor Group, the only weekly podcast serving the car retailing sector. So again, thanks for listening. Thanks for joining us this week. And as always, it's been a pleasure, Curtis.
Yeah, no, many thanks, Phil. Thanks for tuning in, everyone. Thank you to Andy, and we'll see you again next week.